It is time for your midday market update.
Brian Midday with Hightower Advisors joins us right now with that update. What's going on, Brian?
Good morning. How are you guys?
How are you?
Good.
Can you give us kind of a wrap-up of the stock market last week?
Yeah, it was a pretty volatile week last week. I mean, the market was up most of the week, and then it was down in a big way on Friday. Didn't end the week doing hardly anything. The Dow was down just a little bit more than a quarter of a point. The S&P 500 and the NASDAQ were down about the same. 10-year Treasury hardly moved, so the markets didn't do a whole lot. They're teetering right at the top of the trading range, right at the top of the market, making new highs. And unless there's any real incentive for them to push through the high of the market and close meaningfully higher, I think we're just going to see a lot of this bouncing off the highs. And truthfully, I don't think there's any economic data or anything like that to warrant making new highs right now. Biggest problem we're seeing right now is the problem in the Ukraine with Russia. That is a situation that needs to be dealt with. Collective wisdom, believe it or not, as Wall Street is pricing in that Russia does invade Ukraine. That's not going to bode well for the European markets or for ours. It's not going to do as much to ours, but the European markets, that could really cause a problem. That's why they're not real quick to do sanctions like we are. They're very fragile right now.
Is no news good news as far as when it comes to not much activity?
No news is good news. There's an old saying in the markets, sell in May and go away until the fall. I don't think that people do that much any longer, but certainly the markets between May and September are very, very quiet. They've counted in all the first quarter earnings. They kind of have a feel as for what companies are going to do. The geopolitical problems are a little bit of an uncertainty. So the more we know about the Ukraine, the more we know about Russia, the faster it unfolds, the better it will be for the markets. But that's just an uncertainty. It's a hot potato over there.
What do you think we can expect this week when it comes to the stock market?
This week we're looking for a couple of things. We're looking for unemployment numbers and jobless numbers to come in at the end of the week. You know, we don't think there's going to be much movement there. We still think we're going to be about unemployment rate of about 6.7%. And so the Fed is going to continue to keep their interest rates low. Also, we're looking at what do we see elsewhere? GDP. First quarter GDP is announced on Wednesday, and so that's actually come down. They were expecting a little over 2% in GDP for last month, for last quarter. They're actually revising it down to about 1%. So growth was a little bit slower in the first quarter, mostly due to weather. So we should see that come back.
And there's some stocks that are not doing well at this time. Tell us.
Yeah, a lot of the momentum stocks, a lot of the tech stocks are really having a difficult time. So if you look at the NASDAQ market, the NASDAQ is the worst performing market out there, and it's just because it's heavily laden with tech stocks. I mean, Netflix was down another 5% today. Wow. Netflix has almost lost 1/3 of its market value in the last month and a half. Wow. Most of those momentum stocks are just way overvalued on the upside. So when they do make a little bit of a correction, they make a really big correction to the downside. If you believe in Netflix, if you believe in that type of technology, certainly not a bad time to buy, but they are crazy valuations that they're trading at right now.
Doesn't sound like you'd recommend that.
I don't buy them.
Well, with Netflix, does it have anything to do with the fact that they raised their prices? Do you think that has
the
something to do
market
with
actually liked that. Netflix was on its way down, though. Netflix, Tesla, you know, all these, Amazon even, all these momentum stocks, Priceline.com is another one, that have just been doing outrageous things in the market. I mean, Priceline is $1,200 a share plus.
Wow.
You know, Netflix is $400, right in that neighborhood. It's come down quite a bit since. But these stocks are trading at multiples that are just not sustainable by any regular company. And the reason for that is they don't know how much business they're going to pick up or how sustainable it's going to be. So they don't know where that cap is going to be. And that's one of the troubles with new technology companies. So technology's really been taking it on the chin lately. I think large cap growth stocks will do much better. I do think the markets will be up by the end of the year, but so far this year they're just barely treading water. They're down a couple percent.
Well, thank you so much for joining us today.
Thank you.
See you next week.
And they're located in Palm Desert, Hightower Advisors.